Are you a potential home buyer sitting on the sidelines wondering if right now is the best time to buy a home with home prices reaching all-time highs and now we have more inventory coming to the market and things are starting to slow down? Or should you just bite the bullet and rent for another year? Well, in today's video, we're going to talk about the idea of buying versus renting. We're going to give you the things that you have to consider as a first-time home buyer versus renting. What are the pros of buying a home? What do you need to know? Why is home ownership important? And when is it the right time to rent a house? That's what we're going to dive into in detail in today's video. In addition to that, we're going to go over a real-life example of a property I currently have on the market right now. And we're going to show what it's going to rent for per month. And then we're going to show you how it compares to buying that property today. What are the pros of owning that property, buying that property today? And what are the pros of maybe renting that property so that you can make the best decision for you? Before we dive into that though, I want to take a minute and ask a favor. If you find any value in today's content at all, do me a favor, hit that like button. Feel free to subscribe to the channel and share this with anyone you know that may be considering buying a house or considering the idea of renting a property. And also, if you're in the process right now of deciding buying versus renting, or maybe you've been through that process and you made a decision. What did you decide? Do me a favor, leave it in the comments below. That information might be able to help someone else make the right decision. Now, if you're out there in the market at the moment, whether you're on the buying side and or the renting side, you know things have been absolutely crazy. With high buyer demand, a low supply of not only homes, but rentals have driven prices up considerably. So making the decision to buy versus rent is more difficult now than ever, especially as we head into an inflationary environment. Because in an inflationary environment, rents tend to keep going up. So why is home ownership important? That's what I want to talk about in today's video. First off, to start, and then we're going to talk about the idea of when you should rent, and then we'll get into the example that I mentioned earlier. So why is home ownership important? Well, the first thing is it fixes your cost. In an inflationary environment where prices are continuing to go up every month, buying a house with a 30-year fixed mortgage allows you to fix that payment, regardless of what happens to rents, regardless of what happens to home prices, regardless of what happens in the economy, your monthly payment doesn't change. And every single month you make that monthly payment, you're actually paying down the principal on that loan. So not only do you have the forced savings, the money that you're paying down the principal every single month going into, almost a separate account, if you will, you also have the idea of appreciation. Now, many of you are going to look at the market and say, Jeb, the home prices are going to pull back. They've gone up considerably. Yeah, in some markets, we're likely to see some price pullbacks, but on average, we've seen home prices increase about 4.5% per year over the last 50 to 60 years. So on average, home prices go up. So even with those pullbacks in the market, we've seen the average at 4.5%. So you have the idea of a fixed cost. You have the idea of the forced savings by paying down that principal every month. You're putting money into almost a savings account. You're gaining that appreciation in addition to being able to potentially create generational wealth. So all of these things are why home ownership is important, but it's not always a great time to be a home owner or a home buyer. And that's something I want to talk about here in a minute, maybe why you should rent. If you're buying in this environment, you need to have a longer term time horizon. You need to be thinking, I'm going to be in this home 5, 7, 10 years out from now. You need to be thinking long term. You need to be buying something that fits the needs of where you plan to be at that time. If you're single, you're planning on getting married, you're planning on having kids, you need to be thinking about that as you're buying your property now, not just buying a property to get in at the moment with the idea that you're going to sell it and buy something in the next 2 years and be able to upgrade and what have you. That would be great if that happens. But because of the appreciation that we've seen, it's important to be thinking about that longer term time horizon. In addition, you need to have money, reserves in the bank. In addition to any, emergency accounts that you have, you need additional reserves for housing just in case something happens with your job. And more importantly, you need to not be stretching yourself. You can't be house poor. You need to be able to comfortably make that payment every single month. So if you're someone that is, in a temporary position, you plan on moving in a couple of years, you should probably rent a house. You probably shouldn't consider buying a home. Every single month when you pay your rent, you're actually paying the landlord's mortgage. That's something you need to consider. And we're going to go over a really good example here in just a minute where we show what the current rent is and what that looks like that you're paying out every single month versus what it would look like to own that property. Now, a lot of people are looking at the market now going, why? Why is there such a low supply of rentals and houses? Why is there so much demand out there in the market? Well, rentals, there's a lot going on. Not only do you have millennials, millennials are becoming prime buying age. So they're a big proponent of why housing prices have gone up, because these millennials are coming into the market as first-time home buyers and they want to own property, and therefore they're taking up a lot of those entry-level homes. But on the rent side, it's a similar story. You have a lot of millennials out there that are done with college. They're moving out of living with their parents. They're looking for their own home, a place to start on their own. And so you got millennials coming into that environment. You also have sellers that think the market has peaked and they're selling their homes, sitting on the sidelines, waiting for a pullback. Well, temporarily, they need to find a place to rent, and therefore they're taking up some of the rentals. In addition to that, you have lifelong tenants, people that have been renting property, maybe in the same property for a long period of time, where the sellers come in now and said, look, we're going to put this property on the market, we're going to sell it. And so those tenants are now displaced and they need to find a property to rent as well. In addition to the migration patterns that we've seen over the last couple of years, you got people that are moving to different areas, and instead of buying, they're renting just to figure out if they like it there. You got people that have moved out of the big cities, want to be in the suburbs, and they're choosing to rent. Maybe because of where house prices have gone, maybe because they think there's a housing market crash. Whatever reason, these people have decided to rent, and that's taking a lot of these rentals off the market. Now, I can speak from experience in talking about the rental market. It is absolutely crazy out there. In fact, the property that I'm going to talk to you about right now, we had 28 applications on this property. It's a $2,800 per month lease. It's a 2-bedroom, 1.5 bath. It's in Huntington Beach. It's where I'm located here in Southern California. And this isn't the only example I have. I've recently leased out a couple of other properties for clients, and similar stories. 31 applications on one, multiple applications on the other. So demand is very high. And because of that, people are willing to do crazy things. Just like the housing market a year ago, they're willing to pay an entire year's worth of rent up front. Some cases they're willing to up the amount that the landlord wants to charge for the property, and pay more. As you can see from some of these examples here in different stories that I've read across the internet, where people, offered to pay more and also paid a year and even 2 years in advance just to get into the property. So when you're thinking of buying versus renting, you can't think, well, I'm just going to go rent because it's less crazy, because the rental market is as crazy as the housing market is. But let's take a look at the example that I talked about a minute ago. So now some things that we mentioned earlier. This property is listed at $2,800 a month for a rental. Now, this same property today would probably sell for about $575,000. So what we're going to do here is we're going to go over two different examples: the idea of renting this property and the idea of buying this property, just to show you what it looks like at the end of the day. Now, as I mentioned, if this property were to go on the market, it would be listed around $575,000. Now, let's say you're a buyer and you have the money for a down payment. In this case, we're going to use 20% down. Now, I know many buyers out there don't have 20% down. They only have 5% down, or maybe in some cases 3.5% down to do an FHA loan or what have you. And those examples are going to be a little bit different, but we'll use this example and then we'll talk about those at the end. So in this case, if you put 20% down, you'd be financing $460,000. Now, the down payment on this would be $115,000. You put $115,000 down, that's the 20%, and you're financing $460,000. Now, as of today, interest rates on a 30-year fixed are somewhere around 5.25%. which is going to give you a monthly payment of $2,540.14 per month. Now, out of that $2,540, about $527 of that is actually going towards the principal each month. The rest is going towards interest. Now, each month it increases a little bit, but we're just going to say it's $527 for this video, which is roughly $6,331. Now remember that number, we'll come back to it here, but you've got your mortgage payment at $2,540. You're going to have property taxes on this property. Here in Orange County, those property taxes are about 1.25%, which is going to give you a tax amount of $7,198, which is $598 a month in taxes. So if you add that to your mortgage, you factor in the HOA of $300 on this particular property. It has a $300 HOA, and your homeowner's insurance that would be required on this property. You have a total payment of $3,513 per month. Now, that might seem like a lot when you could rent the property for $2,800 per month. Now, remember, the $2,800 is what we were asking from the landlord on this particular property. Now, we had 28 applications on this property. It's likely going to end up renting for around $3,000 per month. But in this case, I'm still going to use the $2,800 just for our video here. So that means over the course of a year, you're actually going to pay $33,600 per month. And you're going to pay that to the landlord. And that money is going to go in their pocket. It's going to go towards the principal on their loan. You're not making any money. You don't have any forced savings. You have nothing happening with that $33,000 other than you have a place to live, which is nice. And maybe that's the right decision depending on where you are in your life. Now, in this case, the mortgage on this property was $3,513, including everything. So in this example, again, it's about $700 more per month. But let's talk about it here. So earlier we mentioned that, in paying down that principal, in the first year, you pay roughly $6,331 towards the principal balance on that loan, which is going to lower the amount you owe on that property. So at the end of the year, you're roughly going to owe $453,669. Now, originally you came in, you put $115,000 down. That's a savings account. That money is, it's in a place that's not going to go anywhere. And something I want to point out, it's a fixed asset. As we move into an inflationary environment, fixed assets are important, right? Because you're fixing the payment on this property. But nevertheless, you're going to end up paying that principal balance down to $453,669. Now, earlier in the video, we talked about appreciation. Historically speaking, we've seen about 4.5% average over, a 50, 60-year period, which means that $575,000 property that you purchased is going to gain roughly $25,875,000 in equity, which means that property is going to be worth around $600,875. So not only did you pay down the principal, you actually got the gift of appreciation in this case. But if you rented in the first year, you got no appreciation, you paid no principal down, you just paid $33,600 towards the landlord. Well, what happens after year two in this case? And we're not going to go long into this, but I'm just going to go over a 2-year period. Well, let's say you rented the property and the rent happened to increase, just say 5% year over year, which is pretty minimal in the big picture. I mean, we've seen rents increase over 10% this year in rents alone, but let's say it increased just 5%. Well, that's $140. So that means your rent in year two is $2,940. Over the course of 12 months, that's $35,280 that you're paying to somebody else's mortgage, helping them pay down their loan, money not going anywhere. It's just going out. Granted, you have a place to live, but $35,000 to do it. Well, in year two, in our example over here, you've now paid your principal down an additional $6,331. Your payment didn't change. Even though inflation's out there, even though rents went up, your payment stayed the same because you have a fixed rate mortgage on this home. And so now, your $460,000 balance that you started with, 2 years ago is $447,330. But you got that 4.5% appreciation again, potentially, which now means your $600,000 home has moved up to $627,914. So not only did you pay down the principal again, you got the gift of appreciation. Now, granted, homes aren't always going to appreciate, but the one thing about owning versus renting is that your payment stays the same. So even if home prices pull back, even if we have a meltdown globally, whatever, your payment doesn't change. And that's one thing I want to stress in this video. And that's why home ownership is so important. That's why it allows and creates generational wealth out there. This is the most important, biggest asset that many people will retire with and be able to potentially pass along to their family to continue that wealth creation. And that's why home ownership is important. Now, again, you need to be buying for the right reasons. You shouldn't just go out and buy a house unless you meet the things that we talked about earlier. So if you're considering buying versus renting, just make sure you're taking all of these things into consideration. In my example from earlier, if you only had 3.5% down versus, renting that property, it may be the best opportunity to rent that property because the difference between your rent and your mortgage would be drastically different. In this case, it's, $700 difference, and it's actually less because we're going to rent the property for over $3,000, but you get the idea. Once you take in the tax advantages and everything of owning property and the things that you can write off, it's pretty much an even trade. It makes sense to own that property. But one thing I want to stress in this video, this, isn't to get you to buy a house. It's to make sure you're thinking through all of these things, both on the pro side and the con side, if you're considering buying versus renting. Now, if you are a home buyer and you're definitely going to buy a house, and your second question is, should I buy or should I wait? Do me a favor, check out this video here. I dive into it in detail, but for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.